Hey, welcome back to another episode of Johnscryptotherapy. So on today's episode, we're going to look back into the charts. We're going to pull a Floyd Mayweather. We're going to understand that the market conditions change, and as good as we are as traders and into this environment, we got to be able to change our positions. So to understand the future of the behavior of the market, it is very important to make sure to come to the markets, look at price and understand what it's doing. So please make sure, guys, you are paying attention. Today is going to be a super masterclass event that everyone should take note and start becoming great traders themselves. Also, I just want to say thank you all for supporting this channel, being a part of the bigger picture, and everyone that I did contact to speak over the phone about becoming my student. I just want to say thank you all for applying. You guys are absolutely amazing, and I can't wait to see some of you guys on the other side. So let's get right into this. Let's understand what the market is doing. I might go a little bit faster, but this is because, I have a lot of years of experience and I just want to give as quick information as I can. So let's do this very carefully and let's get right into it. So let's take away the Elliott wave right here, guys. This is the Elliott wave. Let's just make sure you guys do understand. We have the 1, 2, 3, 4, 5. Then we have the retracement of the C for the future price to go up. Unfortunately, the price did absolutely go up. If you guys did watch my video, the price did go up. But the problem is with this structure is we got to start looking at the bigger news. We got to look at the bigger picture. A lot of people are saying that, Ecomi is stalling on a lot of projects, a lot of things. It's getting postponed and it's getting moved into the future. That's making a lot of whales or a lot of people giving them the opportunity of saying, you know what, if this is happening to Ecomi and we're seeing eventually the projects are not really getting thrown out right away, there might be another time for us to go for a lower price and take some more money. So this is the key. This is the key of psychology when it comes to believing that you are a whale and to understand that everybody is looking for another bag. And important for us to all understand, we all want more OMI tokens, but at a cheaper discount. And for us to see that, we need to see price going down. Let's get focused and let's see what's going on here. So I'm going to move this Elliott wave right here. So this is the Elliott wave. If you guys did remember, this is the fifth wave. So we got the A, B, C, then we got the 1 and the 2. The 2 did not break below the 1. So we're still comfortable to say, this could be a continuation of the Elliott wave to the price to the upside. But on the behavior analysis, we're going to take a look and see what price is doing. So let's take away this as well. Let's take away any immediate trend lines that we do not need, and we'll understand why this is important. So as an important criteria, if you're a trend trader, you want to make sure price does keep above this trend line. This trend line has been solid throughout this past. We have 3 to 4 touches throughout this trend line. Of course, it's been on the top side, showing us that the pressure to the upside is more than ever to happen. But right now, we do see something dramatic happening, and this is very important. And I want to point out some key factors and tips and tricks that is happening right here to understand what the market is doing. So let's do this very carefully, okay? So let's go like this. A lot of people do ask me, could you go a little bit slower? I do apologize, guys. I want to go as slow as I can to give you guys the most information, but I'm trying my best to accommodate with the experienced traders, with the new traders, and everyone of that nature. So hopefully you guys still do like this type of content. So we do have right here price going back up, and then it's finding some resistance. Resistance is giving us a good move to the downside, and of course, we're seeing price going back up. So eventually price is going to find a great support in pressure, and it's going to break this resistance and support zone. When we're looking at price and analysis and we're understanding why did this candle not break it, why did this candle have to? So the reason why it is so is because this is a great level. If it's a great level, you're not going to see smaller candles going through this level. You want to see big candles. The only way to go through is you will only have to have big candles because this is a great level of support and resistance. If it's a small candle, a lot of buy orders will be here saying, it's not your turn to go back in. But if there is a lot of pressure and the pressure is staking in right here saying it's going to be a sell, if this sell is strong and is going towards this level and it's in the midline, this is where a lot of decision is being made. When you're looking at a buyer, a lot of buyers would say, you know what, this is a good price, I want to buy the market. But the problem is with this, a lot of buyers, a lot of sellers are just looking for one thing, profit. So if you know the pressure of this sell order is super strong, what do you think a lot of buyers are going to start to do? They're going to fold and they're going to understand, you know what, I don't want to be a buyer no more. I want to sell the market. And then eventually the volume on a lot of volume indicators will show you a breakout situation. And that's what typically happens. And right here, you can see the same thing. So we had price going back here. A lot of sellers would say, you know what, we're looking for a sell order. We're looking for price to go back down. But because it did not close in that particular status and it did go back up, we did see a huge momentum of a lot of sellers become buyers. And because they became buyers, we had more potential to the upside. Also, this is the most important thing. To a lot of people that are aggressive traders, you know, it is okay if that's your strategy, but I particularly tell a lot of students don't be aggressive traders, because being aggressive is not going to show you where the price is going to go. Being aggressive just means you're going to be the first one, and it does not mean it's going to continue that way. You can flip over and you can lose a lot of money. But if you have a good risk to reward and your strategy does work, there's no hard feelings to that, but make sure it actually works. So right here, guys, if you look at this bullish candle, it went up. When would you say is the best time to buy the market? Not right away. You want to see a retest of structure. So remember this very carefully, guys. When you see price going back up, you want to make sure price can come back down. Yes, it could be around the zone. It could touch the zone. It could be similar to the zone. And that's the key point. You want to get the first move, the volume of all the buyers buying, and you want to get a retracement. That retracement is going to be the deal that you're trying to get from the full move. So because that's the retracement and that's the deal you're trying to get, a lot of people will use fib retracements. Fib retracements are really good. A lot of people would put it for the 50 and the 61.8. So when we look at this retracement right here, we see price going back up, and then you see a nice wick rejection. This wick rejection would have been the time for a lot of investors to say, you know what, price is eventually going to go up. Because price is going to go up, they're finding ways to buy the market. So once again, this is how you would do it. This is how you understand structure and become a great trader yourself. The most important thing throughout this whole series right here is if you're looking at behavior and trends and everything like that, guys, you would understand that price eventually is breaking out of structure. So right here, we do have a descending triangle right here. And you guys can see, yes, it could be symmetrical if you want to draw it that way, but a descending triangle is very important. So let's just go like this right here. And we have a breakout right there towards this strategy. So because we do see this a beautiful breakout, this is very important. So guys, remember what I told you. This is the crucial key, okay? So we have a lot of wick rejections. These are the small movers. These are movers that come into the project and say, you know what, we want to go lower, but a lot of buyers say, you know what, this is not a great time, and you don't have the strength to break lower. That's why right here, when we were looking for selling opportunity, we did not get that opportunity because we had a lot of buyers saying this is the best opportunity for the price to go up. And right here, small candles cannot pass this zone. And this is super important. This is key. If we cannot get small candles to pass the zone and we have a lot of activity, this is making the zone into a stronger section of support and resistance. Because we have support and resistance, the only way a candle can pass this zone is if we have volume and a lot of pressure. And if you guys look very carefully, what do we have right here? We have a huge pressure to the downside. And this is why it's super important to understand trading, okay guys? So this is very important. So now we have a breakout situation. Now to all those that are wondering, what is the best thing to do? It is very simple. It is very easy to understand what to do, okay guys? So remember, the bigger trend in the future, of course, Ecomi is going to reach the moon, but having these pullbacks are only going to significantly increase the amount of gain we're truly going to see. And because we are going to see a huge gain, it is important to stock up on more Omi tokens and understand how price is going to do so. So for a lot of people that would say, hey, look, okay, so we have this breakout. This is beautiful. Okay, so we see a price breaking this trend line. So you know what? This trend line is valid at that time. Now we don't really need it anymore, okay? Now we need to see one thing that is going on very well is price broke this trend line. That means we do not need it anymore, and we'll take it out of our insight. So because we took it out of our insight, now we need to see what price is going to do before we enter into a position, if we're going to get into a position for a selling pressure. What I like to see is price going back up to key levels, right guys? Key levels. The same thing as here. Once it broke out, retracement all the way back down, buying pressure to the upside, okay? Break to the downside, retracement to key levels, and then we're gonna see price going all the way back down. This is important if you guys want to learn how to trade with key levels. This is just behavior of the market, and this is very important, okay? So we have this descending triangle showing us formation that price can eventually go down. So that is very important to understand as well, guys. Also, if you are into just naked trading, I want to show you other techniques. We do have the symmetrical triangle. We talked about this. The symmetrical triangle, the pressure could go any way. When you're looking at a descending triangle, of course, you're looking for the pressure to go to the downside, but we do have a lot of pressure coming to the upside. So eventually it could have broke anyway, but we did want to see the market go a little bit lower, and this is totally fine. Also, when we're looking at the head and shoulders pattern right here, guys, you could draw like this. We could see something really clever here. What we could see is something super cool. If we drew it this way and we understood that price, even though it was trying to find some support and resistance here, it actually broke the head and shoulders pattern. Because it broke the head and shoulders pattern, we could see that it went lower, broke it, it went really low, but the problem is it wasn't a closing of a huge candle, but it was a closing of a smaller candle. But as a safe trader, did we want to get into a retest right here? Absolutely not, because we knew there was a key level right here. What's a good time to get into the market? When we see a huge violation move to the downside, a retracement into a key level, then we're going to sell off to the downside, okay? That is the only important time to look for. If you see price going back up and the closing above structure, this was a fake out, and then we're going to continue with the trend. But it's important to understand if price goes back up to key levels, I want to see a lot of wick rejections, but as a resistance base, not a support. Right here, these are all supports showing us pressure to upside. We want to say the same thing as a resistance based trade. So that is very important. So hopefully you guys do understand what I'm trying to say. Wait for a price to go back up. Wait for a good identification candle for the price to continue to the downside. And a lot of people say, hey, how would you know where to take profits? Very simple, guys. You want to go from the head, go towards the neck right here, and then you would take this for the breakout situation. Because it broke out of this neckline here, we're still looking for that retracement right here. And guys, it's really safe to say 0.0050, it is totally our strongest point. Because it is our strongest point, what do you think is eventually going to happen? We're going to see a lot of whales, a lot of people trying to say, you know what, I want to get this coin one more time. So that is another routine that we can absolutely see. So please make sure to keep that in mind and understand what the price is going to do. So it's important to see, you know, this is the zone that we're seeing typically for a retracement to the downside. We can absolutely see the zone being hit. Just keep a keen eye to understand what price is going to do. Also, I do want to talk about the Elliott wave just so you guys can understand the bigger picture. So keep in mind, we do have this head and shoulders breaking out, retest of structure. We did not want to get into a trade to the downside until we've seen this line being broken. Once it's broken and violated, we want to see a retest of structure. If it gives us a doji, if it gives us tweezers, if it gives us a lot of great information, then we'll see price going back down. It is very important, guys. It is super important to understand the principles of trading. So once again, we can absolutely see price going to 0.0050, and that's totally fine. We need to adjust with the criterias and understand what the market is about to do. Because we're understanding what the market is about to do does not mean in the overall trend we're not bullish. Absolutely, we're still bullish. We're understanding the price is eventually going to go up, okay? So it's very important to understand that. Let's go into the daily chart. I want to show you guys the bigger picture as well. And this is why I love trading. Trading is so much fun. You don't need to just make sure to watch one asset. You could watch multi time frames. You could watch different assets and make a ton of money. So this is the way I like to trade. I like to look at charts. It only takes me 10 minutes to look at a simple chart, make some decisions, and then go from there, okay, guys? So it's very important. If you guys do want to become traders, understand these key principles. So let's go into the daily. All right, so this is the daily chart. This is why I consider this a master class. So if you guys really want to pay attention and understand why I say the higher time frame is the most important time frame to understand positioning. Positioning is key. When you're looking at the bigger picture, you're understanding the whole overview of what's happening in the market. So once again, I want to explain this very carefully, guys. Look at this candle right here, the bullish candle. We talked about this. We said it's only going to be a big move that's going to close above structure. Right here, a bullish move, closed above structure, and then we had price going back up. We see that price is going to go back up, and this is great if you want to become traders to understand, okay, this was a bullish candle, broke above structure, go to a smaller time frame and take buying position. So right now, when you see the market is going back down, it is very important. This is why I say at least 50 to 60 people lose a lot of positions and trades, is because of this criteria. So I want to draw it out for you guys so you see what I'm talking about. So pretend we have a candle like that and this. Okay, so you know what? Let me draw this candle like this. So if we have a candle like this candle and it's closing as a red candle, this is a breakout situation. Reasons why: this candle closed below structure and it's a red candle and it's closed below structure. That is the key. It closed below the structure. If the candle is still forming, and this is the daily chart, guys, you want to make sure this candle closes this way. Do not enter the trade halfway in the day. So let's just say this candle is a daily chart. You see it and you say to yourself, I want to be early to the trade. You do not want to enter into this trade right away. You want to wait for the full day of this candle being closed. Once this candle is fully closed, then you could say to yourself, okay, yeah, this is a bearish candle and we're going to see bearish momentum, bearish price. That is the only way to look into this. Okay, guys, it is super important to look only into this criteria. Okay, so if you're wondering to yourself, okay, so because the candle did close like this, we are bearish, but what would happen if the candle actually closes like this? If the candle closes like this above structure, basically everyone that wanted to sell and get into the market basically got fooled out, and now the momentum is still to the upside and we're going to see price continue to the upside. Hopefully you guys do look at this and truly understand that it's very important to see wick rejections and see where the pressure is going. So the wick rejection is going to be like this if it does close to the top side. But if it does close like this and the candle is just like that, guys, we're good to say that, you know, eventually price is going to go down. That is another masterclass thing that hopefully you guys can take notes and learn as much as you can. So let's take away this right here. All right. The reason for this video is to show you guys we did have the Elliott wave, but now we're going to understand more into the Elliott wave and change it all around, okay? We did have the Elliott wave around this formation. We've seen the bigger picture of the Elliott wave. So I want to draw this out. Let's do a little bit quicker so you guys can see. So let's just say the Elliott wave was right here, 1, right there, 2, 3, 4, 5, and then we had a retracement of the ABC, right, guys? So that's totally fine. This is the smaller picture, and the smaller picture identified to us where price can eventually go. But if you want to be a great trader, understand when you're trading Elliott wave, you got to be able to change it around and make sure it makes sense with the market condition. So let's look at this very carefully. So now we are going to take the Elliott wave and do the same principle right here, okay, guys? So we got the first wave right here. We got the second one right there. Third right here, fourth right here, and this is going to be the fifth. When you're looking at this now, you're saying to yourself, wow, I see the bigger picture, and you know what? The way it's going, maybe, you know what? There is a great possibility we could see 0.0050 level being hit one more time, and this is why it's important to understand what the future price is going to do. So let's take the AB right here. So this will be the A, and this will be the B, and then the C, we're going to see it around this section. Reasons why I like seeing the C around this section and why it could go there, okay? We can see the head and shoulders pattern going down for the take profit. We can absolutely see the symmetrical triangle going down and also the descending triangle as well, showing us that, you know, profits can absolutely be taken to the downside. So this can only be possible if you're looking at this and this bearish candle does close below structure. So it's very important for this to close below structure. If it does not and we have a close above structure, then we're going to continue with price going up. Because it closed below structure, we're still good to see that price can eventually go down. So let's do this very carefully. So now we're wondering, does this make sense? Let's look at the Elliott wave count and understand the rules before we get into this trading position. So right here, guys, you already know number 1 is going to be number 2 cannot pass number 1. And guess what, guys? If you look very carefully, it did not pass number 1. We're good to go. So that's perfect. The second one is going to be right here. The third wave cannot be the smallest. So you guys could take the fib retracement. You could take this trend line right here. You could draw whatever way you want. Make sure it lines up. Once it lines up, you take this move, put it towards the B leg, and then you could clearly see that right here, guys, 3 is higher than 1. That is showing us that, you know what, the price is good. Let me show you guys what I'm talking about. So right here is going to be the leg. So if you take the leg retracement from this move and you move it to the 2, it's going to end up on this horizontal plane. This horizontal plane is showing me that 3 is not the smallest wave. It's good to go for this criteria. Last but not least, you already know the third criteria is going to be number 4. Number 4 cannot get lower or get into the zone of number 1. And guess what, guys? It did not get into the zone of number 1. So we're good. It did not go and violate this move because the price did not go lower. So we're good to go. We have all the waves correctively in set. So we have this move right here, guys, and we understood that this is actually making sense. So we had the bearish butterfly as well when we said the price was going to go down. Found the 38 retracement. This is very good to go. Also, guys, if you are looking for this first leg, you can absolutely put it here. You can even put it here, guys. So it's up to you how you like to draw your Elliott wave. And this is the cool thing about Elliott waves. You can make it make sense. So a lot of people are wondering, hey, how do you do this? You go to any chart and understand what the price is doing. So like I said, even if we do this, the criteria of 2 did not pass 1, we're still good to go. We can actually put it like this, and we can see clearly that, you know, the 38 retracement was right around the corner, and that's actually the first goal when we're looking at the retracement leg of ABC, is to look for the 38%. So we did get that. This is really crucial. So now I'm going to delete this. When we're looking for the B leg, it's going to be exactly, we're going to see price going towards the 61.8. So when you look at price right here, it did touch the 61.8 and we're good to go. So the B leg was roughly in the 61.8, and that is a great thing to see. Now, a lot of people say when we're looking at the 61.8, that's perfect. We need to look for the extension. Extension is going to be the same thing. Let's draw like this. When you're looking at the 61.8, the extension of 61.8 retracement is going to be roughly around the 1.618. So once you look at that very carefully, guys, right here, 1.618, that is roughly landing exactly towards the level that we already identified. If we've seen a bearish trend, I already told you guys many times that the 50 level, 0.0050 level is our strongest hold. So once again, guys, price going all the way back down here, this is absolutely going to be the last crucial time that we see price at this level. I am going to make sure I put a lot of buy orders. This is going to be the biggest discount for Omi token ever in the history of this chart. So guys, I'm telling you, this is going to be such a crucial price that if you do want to take notes and you understand that price can eventually go down there, please make sure to put some buy orders, buy limits, and understand that that level is going to be crucial. So also when you're looking at this, let's do this as well. You want to put a parallel channel. Let's do like this. And let's go like this. And once we put a parallel channel, this is only showing me. And if we do see this, we truly want to see price going sideways, then going down, so it could touch this level. If price does go down like this, you know, this is going to be support. We can see going up and down, but slowly but surely, we will eventually see price around this zone. So guys, please make sure to understand why this is important, and this is why trading is not easy. Trading comes with a lot of routine, a lot of skills, and that's what I'm here to do. I'm here to show all these amazing students that applied that this is the future, and you'll be able to make any money with any cryptocurrency, and that's the goal. So once again, look at this very carefully. When you're looking at C, this is 3, okay guys? Remember 3 is right here, and this is the wave 3, and you can see C is typically landing in between wave 3. So that is a good criteria before we see a huge storm in price. If we did want to see a rejection here, we did not want to see a close of structure, guys, because we did see a close of structure and it looks like it's closing below structure. It is important to wait for the whole day, guys. Wait for this to close below structure. If it is, this is a bearish sentiment, then we're going to see price going down. Remember, it's very important to understand structure. If we do see a break back in and it does close bullish, then we can continue with the bullish. But right now, the way it sits, we can absolutely see 0.0050 level. So to all those that are wondering, is it possible? Absolutely, it's possible. We're just looking at behavior of the trend, okay? So let's move this away. Let's take away this right here. And guys, look at this very carefully, okay? We're seeing price going lower, so it made a lower low. And then when you look at this, we see price making a lower high. Lower high is forming into another move to the downside, and eventually we're going to see a lower low. And then after that lower low, we're going to see a lower high. That's going to be a retracement, and we're going to see a retracement to a key level. A key level, guys, make sure sure you understand that. Then we're going to see price going back down. Where I'm looking to sell is going to be at a level that it makes sense for the market to find support and resistance, basically resistance for the price to go down. Remember, we have the legs going up for the 5-way. We have the ABC going down. We have the head and shoulders pattern showing us price could go down. We have the descending triangle showing us the price could go down. We have the symmetrical triangle showing us the price could go down. But the most important thing, guys, make sure you understand this very important thing. But also, if you are into trend trading and you do have this line right here, if this line does get violated and does get broken, let's just say it does, and the price does eventually go up, we are going to look for a retracement back on top of this. Take this leg right here. This is going to become support. Then we will see price going up. But eventually, right now, as it sits, if this candle does close bearish, we will absolutely see 0.0050 levels being hit. So hopefully this does help you guys. I am a little sick. I'm under the weather. So I just wanted to give you as quick information as I can. I love teaching. I just want to help you guys as much as you can. So please make sure to follow these criteria. And trust me when I say you can make a ton of money doing this, right? This is not financial advice. This is my advice that I give myself and my students. So it's up to you to understand what's going on. A lot of students already sent me some screenshots of making $10,000 to even $50,000 from my trading plans throughout my educational videos. So please guys, remember, in order for this to become bearish, let this candle close, wait for a retest of structure. If price already goes down, that's okay. Go to a lower time frame, look for a pullback, wait for a pullback. And if price does pull back and we have a good confirmation, price will go down and we will see 0.0050 level. If this zone gets faked out and this candle does not close bearish and it close bullish and we have a break of this trend line and we have a retest, guys, a retest. Don't get into the trade right away. Wait for a retest, and that confirmation of that retest, we're good to say that we will eventually see price going up. If you are a safe trader and you just want to be, away from the trade, wait for high levels of structure to be broken, like this level right here. Wait for price to actually go above structure, then wait for a pullback, then get into that leg. Okay, so it's very important for a lot of traders to understand. This is very crucial. Make sure as a trader you're using all of this as a stepping stone. Each time price is making higher highs and higher lows, you're looking to climb the stairs. If price eventually goes lower and we do eventually see price going lower, then we need to understand we need to switch the bias of the trend so we can make the most money. Hopefully this does help. I love every single one of you guys. Thank you guys for supporting this channel. Take it easy, and John out. Peace.